Welcome to the Lunar Capital webinar. My name is Ashraf Garda, and the purpose for me now, not just to welcome you, but to encourage you to tell your mates, to tell your chummies, to tell your friends, to tell your brews, to tell all these people you need to join in. Because as you would know already, Lunar Capital is about learning, investing, or learn, invest, and enjoy. Now the plan is we should be starting at 6. Obviously, we all have to deal with issues called load shedding, isn't it? So the plan is to start in a few minutes' time, but it gives you a chance to, charge up whatever you need to do, get your coffee, get some hot chocolate. Perhaps I would do that in between supper and whatever else you're going to do. But also, very importantly, can you share the links with your friends, really? People that you think would benefit from the tremendous knowledge around how you need to invest your money to grow your wealth in the right way. But also, we're going to talk about why numbers matter. We'll chat to Dr. Ridhwaan Suliman about that, and he proved certainly around COVID-19 in particular why numbers absolutely matter. All of that will start pretty shortly. Good evening, a warm welcome to the Lunar Capital webinar. It's a webinar, it's an event that takes place every year, and it's a fascinating event because it really brings together the journey of where Lunar Capital has come from, but also in that journey, the amount of people that Lunar Capital has taken with them or with themselves and try to ensure that there's fantastic growth in their investments. And that is why, for me, it's not just a privilege to host this event, but to bear witness to it. I think it'll be a fantastic evening and some great insights indeed. My name is Ashraf Garda. I want to just emphasize this point. Lunar Capital, the mantra, learn, invest and enjoy. And I'm sure all of us can resonate with that the enjoyment really comes after the learning, and then based upon the learning, the investment takes place, and then you reap or enjoy the benefits indeed. Now, the plan is to speak to you for about an hour and a half, and we've got a combination of lots of learning around Lunar Capital in terms of insights in terms of South Africa, investing and global investment that you need to be very aware of. There's also insights coming out from panelists in terms of their own story and their own journey linked to Lunar Capital, that I think you will find very, very enjoyable, because we know that there are many people currently on this webinar, in this space, who are already partnered with Lunar Capital, but there are many others watching for the very first time and making decisions or deciding whether you should make that all-important decision to invest with Lunar. So that comes up later. You'll benefit greatly from that. The theme of today really is all about numbers and why numbers matter. Now, obviously, when it comes to investments, numbers matter. When it comes to issues like load shedding and what time you go off or on, numbers matter. When it comes to what time you wake up and don't, all those things, numbers matter as well. But definitely numbers matter, as we've seen with regards to COVID-19. And therefore, we've roped in someone who I think has showed more than most people in the country and amplified why numbers around COVID-19 absolutely matter. So two people who'll start the event, then we'll get to the panelists later on. First up, Sabir Munshi, who's the CEO, he's the founder of Lunar Capital. Sabir, great to have you, of course, absolutely. Many guys know you as just Shabs because they've done business with you, which is fantastic, right? And Dr. Ridhwaan Suliman, who's the guy who knows all about numbers. And Ridhwaan, appreciate you coming all the way to come and join us as well today. So both of you, warm welcome. Good evening to both of you.
Thank you, Ashraf. Thank you very much. Yeah, looking forward to listening to Ridhwaan and his insights, and engaging with everyone out there.
And looking forward to in fact, both your presentations of sorts later on. But I want to ask you this first up, right? And yes, maybe it's a story that's been told 10 times, but it needs to be amplified once again. Give me the story of Lunar Capital and how it all started.
So it's a fascinating story. Starting out in Lenasia, in the late 70s, early 80s, when a few youngsters, people from my era, would, typically get together. A few friends would get together on Friday evenings, on the weekends, and basically, just go and do what young people do. Go and have some fun, maybe get up to some nonsense, etc. And one of the individuals there, a little bit older than the rest of the guys, said to them, listen, you guys go out and you work on Friday afternoons and you work on Saturday mornings and you get a bit of spending money maybe from your folks, but you guys go and blow all of this money out over the weekends. So give me 20 rands every single month, and we're going to sort of collect that money. We're going to put it in a call account, and we're going to earn some interest, and we're all going to grow through that. And of course, the call account became unit trust. And eventually a company was formed. The company is called High Gain Investments, and they started investing in the stock market.
And this is over what, like a 2-decade period?
This is from like the 80s. So we're really talking more. So it's like probably closer to 4 decades. Okay. I got involved in them. I'm very envious that I wasn't there as part of the start, but I got involved in the early 90s. And when I got married, my wife knew some of these these friends, and they invited me to become a member of that. And the rest is history, And High Gain, I mean, today is a shareholder in one of the founding shareholders in Lunar Capital. They've also invested some of their hard-earned money over that many decades, into the Lunar Investment Fund. And that's really where the birth came from.
And very quickly, just 2 quick lessons to come out of that for you.
Two quick lessons. One, stay the game. Investing is a long-term gain, and over the long term, compounded returns gives you a significant kind of benefit. The other thing that I would say is that all of us that are in High Gain are good friends. We implicitly trust each other, we implicitly back each other up, and we never ever blame each other, for any mistake. So if I made a call on a particular stock, or whoever made a call on a particular stock, and it doesn't go well, we don't blame each other. But in the long term, we've actually made, really good returns.
And there you are.
Yeah.
And why is Lunar Capital called Lunar Capital?
So Lunar Capital, interestingly, is called Lunar Capital. Firstly, we think it's about reaching for the moon, reaching for, the out there. And secondly, there's if you know my surname, it's Munshi. And moon and lunar, and moon and lunar, so when I originally started the company, asked my wife and my daughter and my son, what name would we like, and we all kind of settled on Lunar Capital. So, and fortunately, the name was available, and that's the history. The one other thing I want to say, the person that actually said who, the 20 rands, he's a director of our company. His name is Vijay Bana. We call him boss. And he is our boss. I know he's out there on the webinar, he's listening to us. And boss, thank you, for starting this particular journey. I mean, it's an amazing story that you started. And to everyone in Highgain and also my other fellow, investors, in Lunar, over and above Highgain. You've really given us the start, and it's been a fantastic journey.
Well, there you are. Well, I certainly like that whole idea. What's that old soccer mantra of, the sky is the limit? But in this case here, come on, man. The moon certainly gives you so much in terms of its amplification of the night skies. And I think there's a wonderful analogy of that, because when people have dark days, what do you look out for? And probably you're having it even now. What do you look out for? You look out for the moon as an illuminator. And perhaps in that sense, investments represents just that. The other point is the issue of numbers, right? Now, the magic number in this case is $20. $20 effectively changed people's lives, okay? And maybe that issue of what is numbers, what matters around numbers, is a thing we're going to stick around with all throughout the evening. From your side, as part of the audience, do share it with your friends that they can join us, because we'd love as many people as possible to be part of this. That's one thing. You can also post on social media, by the way, Lunar Capital, and via the webinar, you actually can screen grab all of us right away. So post it and say something like, I am here, or we are here, which is just fantastic. But thirdly, you can also post questions. You can comment and you can ask questions, and hopefully those questions will be answered. We'll certainly try and endeavor. Well, not me. We're going to get the guy who's the company's named after him, so now we know why Munshi means lunar. So now you know that anyway, right? But Shabir, we're going to talk to you later on, right? Looking forward to Shabir Munshi's presentation. But I'm going to bring in Dr. Ridhwaan Suliman, right, for now. So, Ridhwaan, I appreciate you giving off your time, firstly, right? We're going to talk about numbers, and you have this very important role of telling us why numbers really matter. But perhaps tell us, what is it you do? Just a quick outline in terms of the work that you really do.
Thank you so much, Ashraf. Before I answer that, let me first thank Shabir and everyone at Lunar Capital for having me. We're currently experiencing a supermoon, and I think it also ties in quite nicely with the super event on a topic that I'm quite passionate about. So thanks so much for the invite and for having me. Ashraf, I'm currently a senior researcher at the CSIR with a background in engineering and applied mathematics, and also an associate at the University of Johannesburg and the National Institute for Theoretical and Computational Sciences.
Some words at some famous establishment in the UK. Tell me about that.
So I spent some time in the UK completing my PhD studies.
And it's not giving us any names, no name dropping.
No.
Oh, you have to Google it and find out for yourself, right? Well, whatever it is you've done before, you have to accept your name is now very much linked with the COVID landscape in South Africa. Yet you're not a medical person in that sense, although I call you Dr. Ridhwaan Suliman. What happened to you? Something happened around you and numbers and the COVID numbers that triggered something for you, and you did what?
So numbers do matter. Numbers help us to quantify observations, to understand situations better, and ultimately to make decisions that hopefully can improve our lives. When COVID came about, it was a data-driven pandemic. Everything that we observed was being quantified by numbers, the number of infections, the number of hospitalizations, and the number of deaths. However, that wasn't being shared in a way that, for me, didn't quite tell the story of where we were at and where we were headed.
As the member of the public in that case?
Yes, as someone just observing during a hard level 5 lockdown, what is the situation? Are we coming out of a level 5 lockdown after 3 weeks? I couldn't tell that just looking from the daily numbers that were published, so I decided in my personal capacity to track the numbers and understand the trends.
And that was not part of your brief. I mean, that's something you did on your own.
That's correct. So I did this in my personal capacity and started to share this with initially friends and family and then thereafter on social media.
Okay, so there you are, a numbers activist, right? How did, to cut a long story short, what happened when you did that? What happened to you and the broader South African public?
So it certainly took on a lot more attention than I expected. I initially just wanted to share this with friends and family, and for anyone who's interested in better understanding the COVID-19 pandemic situation in the country. It gained attention from media to other industries, eventually became part of my job where I helped to share the data at decision-making level.
And what it proves once again, if we didn't know that before, is that numbers matter, but numbers explained matters, and numbers matter well when we make informed decisions based upon those numbers, which at that stage, before you started doing what you did, all of us were seeing those numbers and 5,000 people are infected, 10,000 people are, and they meant very little. We couldn't really grasp it. So what I'm going to do, I'm going to indulge you for the next 20 minutes or so, right? And I'm happy to get the public as well to also post questions and comments. You certainly can do that, so you can just post it in the chat line right away. Comments, questions, whatever it is, around the broader scheme of or theme of why numbers matter. So I'm going to indulge you to explain, first of all, seriously, why do numbers matter?
So as indicated, numbers help us to quantify observations, to give us a quantitative analysis to help us make decisions, make comparisons, and ultimately improve our lives. I think that's simply why numbers are important.
And you've got some fascinating examples. Naturally, we're going to start where it all started for you with COVID-19.
Yeah, so COVID-19, understanding what the numbers mean has helped us to understand the pandemic. And a way of communicating the numbers is through graphs or visuals. And I've tried to share these numbers around COVID through graphics and visuals. Perhaps if I may, I'd like to bring up a slide showing the epidemiological trajectory of COVID-19 in South Africa.
Okay, go ahead.
So the graph here shows the number of infections in South Africa since the start of the pandemic and highlights the 5 waves or surges of infections that we have experienced. But I just want to highlight 3 aspects of why data matters in terms of the COVID-19 pandemic, but in the broader sense of how data and decision making is still relevant coming back to the finance and investment space. Firstly, if we look at what happened back in March 2020, we went into a very harsh level 5 lockdown without any data. That decision was made based on anecdotal evidence or data and evidence that we were seeing from countries globally. Over time, we've had more data to help us understand where we're at in the pandemic, where we were experiencing surges, and that helped us to inform interventions and policy to try and mitigate the spread of infections. So the important point is data does matter, and data helps us to understand and drive decisions. Secondly, we must understand that yes, data is good, but it's not all. It's not always just as simple as that. Data does have limitations, and over time, those indicators that are used to drive decisions vary. For example, early on in the pandemic, we were tracking case numbers and infection rates quite closely, but we never understood that those case numbers related to the testing rates that we were doing. So the more people got infected, the more people presented for testing, the more infections we were seeing. But we needed to understand that the infection rates also tied in with how much testing that we were doing, and so that proportion of tests that were positive, or the test positivity rate, is crucial in combination with the actual number of cases.
And you were one of the first people, if I can recollect, who started focusing on positivity rate.
100%. For 2 waves, we went through almost a year where this indicator was not made publicly available. Fortunately, as we reached the third wave back in the middle of 2021, this particular indicator started to be published more widely. We probably overcompensated and spent too much focus on the test positivity, forgetting about the actual number of infections. But the idea is that both the actual rate of infections, the absolute number, and the test positivity are important in making those decisions and understanding where we're at in the pandemic. But going beyond that, what happened in our fourth wave towards the end of last year is we saw a rapid surge in infections with a growth rate of infections doubling every 2 days because of the most transmissible variant, the Omicron variant that emerged. We saw the test positivity rates as well also reach record levels. However, if you look at the vertical lines towards the right of the slide, you'll notice that we never went into harsher lockdown levels, rightfully. And the reason for that is, although we were seeing much more infections, there was a decoupling and significantly fewer hospitalizations and fewer deaths. So the point being that over time, the indicators and the numbers used for decisions changed. The final point to make around the importance of numbers and decision making is the timing in which the decisions are made. Unfortunately, in South Africa's pandemic situation, the interventions and the restrictions that were implemented were reactive and probably too slow to be most effective, and ultimately weren't as effective as they should be. And this can be confirmed by the fact that over 90% of South Africans have been exposed to the virus thus far.
And therefore, and I know you're not, I mean, that's not your space, the medical side of it, but I mean, the great lessons, therefore, to learn, to share with the South African public now around the numbers in COVID?
So I think threefold: the importance of having data and having access to data, understanding which indicators are relevant at which point, and then ensuring that decisions are made timelessly and made with the right time frame so that they can be most effective.
And I mean, part of the decisions is getting the data, which is the numbers, and then being able to analyze those decisions well to make really sound decisions, isn't it?
100%.
Yeah, big issue. Now, that's not all in terms of numbers. You have more to tell us, right?
Yeah, so I think I just want to step back beyond COVID. We understand that COVID has been the focus for the last 2 years. But we need to understand that prior to COVID arriving, South Africa has had a burdened healthcare system. We have many communicable and non-communicable diseases that have placed a heavy burden on the country. So we can't forget that the HIV pandemic continues to create a burden, and also TB has been the leading cause of death in South Africa. Unfortunately, because of the emergence of the COVID pandemic, our shift and our resources have been allocated to manage that and create extra burden.
And I think that's come up in the past. To say, okay, now we understand the COVID numbers, huge emphasis on that. I mean, it's been part of the daily bulletins. I mean, you've tweeted regularly, etc. Now it's like, hold it, we actually need data, and they're available for a whole range of other issues, and that's what you're telling me.
Yes, and we do have data. It's about the context and understanding. And we know that TB deaths, there are approximately 61,000 deaths due to TB in 2020, and similarly in the years preceding that, it has been the leading cause of death. That equates to just over 167 TB deaths per day, which is significant. And so unfortunately, we still have to pick up the slack and the burden and manage that in context that COVID is not just the be-all and end-all. There's other aspects.
The graph right now. You're going to talk us through some of that you've just explained?
I've just shared that now as we talk.
And I mean, what do you think? I mean, in terms of policies and therefore decision making based upon that. Again, it's not your space, and I understand that, but your space is to deliver numbers, right? Are sound decisions being made around all those issues? You've listed about 10 or 15 different items, right? Outside of COVID-19, starting with HIV?
Well, I don't know exactly what decisions are being made in terms of non-COVID related issues, but in general, I don't think we're using the data sufficiently at a policy level. I think we can do a lot more to bring forward the data that we have at our disposal to drive the decision making.
Okay, the other big data issue is like load shedding.
Yes.
What time is it on? What time is it off? How does it affect our lives? You've got some stats on that.
Unfortunately, load shedding is a very topical problem and challenge right now. And there's a lot of baggage and politics behind the situation. Maybe by showing this graph that I have here, just identify a couple of trends as to what the numbers around load shedding are saying. The graph on the left shows the amount of load shedding that we've had over the past decade. The focus should be on the last few years since 2018. There's been a consistent rise in the number of hours of load shedding that we've experienced in the country. And coupled with that is the severity of the load shedding that we've experienced. Over time, we've had much more energy being shed from the grid. These graphs are courtesy of my colleagues at the CSIR. Just to add to this graph, what isn't shown here is in 2021, we're only in July this year, we've had more load shedding this year already compared to any of the previous years in terms of both the number of
numbers, yeah?
in terms of the number of hours, but also in terms of the energy shed. We're already at over 3,000 gigawatt hours of energy shed this year, which is much more than any of the previous years, and we're only just over halfway through the year. So that's one trend to take note of. The graph on the right is another trend to understand, and that's the energy availability factor. And there are seasonal effects over time, but essentially what the trend is showing is a downward availability of energy. And so just looking at these two trends, it's clear that we have a problem. We have a national crisis. The data is there. What we need now is an intervention or some sort of decision to stop that trend, to turn that around. We're hearing that possibly there will be another family type of meeting to address this, but the data there is...
Almost a state of national disaster around energy only. Yeah?
Yes, and the data is clear that it is an issue and something needs to be done to turn this around. And it's not a surprise that we're experiencing stage 6 load shedding, and there's even a risk of stage 8, unfortunately. So the data is clear and decisions need to be made based on that.
Now, again, you may not have this right now, but I think people watching us would say, well, like, is there data that tells us, like, if we look at the COVID example, how COVID can be positive, but you don't have to die, and the vast majority of the people did not die, although many did die, right? But so in load shedding terms, do we have data that tells us how it's affected individual families, how it's affected productivity, how it's affected profitability within companies? I mean, do you have that? Is there something that needs to be looked at?
I don't have the data myself. I'm sure there are possibly indicators, but it's a really important point. Beyond it just being a national crisis, it's more than that. It's affecting people's businesses. Many people probably in this setting, their businesses are being affected. You need to take into account ways to mitigate load shedding, which has overhead costs or initial costs. Beyond that, it affects people personally. What we want is people to have access to electricity, to be able to have affordable access as well. And what load shedding is doing is denying people that right.
Yeah. And I mean, that's the point that you've made, that we can talk at a macro national level, and that what that does, it creates a doomsday scenario, and sometimes rightfully so, because it does create an awareness. But ultimately, for people even watching us right now, it always matters in terms of how it impacts upon them directly, right? The same happened with COVID, and the same now with load shedding.
Yes, 100%. There is the bigger picture, but then ultimately there is the personal focus. How does it affect everyone individually? Okay. And I think that is important.
All right. Well, I think there's maybe a lot more that will come out of that conversation, if not today, maybe some other time. And I look forward to seeing some of your graphics on Twitter in that space particularly, right? What else have you got? You've got something around lifestyle issues, because we were talking about numbers off the air. And I mean, we can look at a range of issues: inequality, crime, murders, deaths, unemployment, all those numbers. But you have an interesting take around that, around context, right?
Well, yeah, it's an interesting question when we discussed the theme and discussions prior, why numbers matter and what numbers matter, I can easily start quoting that we average 67 murders per day, that there are 120 rape cases per day, or the unemployment figures of 35%, or depending up to 45, using whatever criteria you use. But I decided to take a step back and understand all of those absolute numbers have negative connotations, and we already have heard of all of those numbers in the news and in the media. So maybe philosophically we need to ask ourselves, why do we focus on events and individual numbers, particularly in the news and the media? So I'd like to just maybe take it a step back, an opportunity to understand what other indicators are there that we can use to measure progress and to measure whether our decisions are having an impact.
Looking forward to that. And before we get to the first one around child mortality, let me just encourage you as well. Questions you may want to put to Dr. Ridhwaan Suliman, feel free to do so. Drop a question, drop a comment around the broader issue of why stats matter or why numbers matter. You can do so. There's a good chance we could pick up some of your questions just after we complete the presentation around the slides. Okay, go ahead with the child mortality then.
So the slide that's up here at the moment shows an indicator relating to child mortality in South Africa. It's reflective of the healthcare system in the country. And what you'll see is generally a downward trend in the mortality of children. There is an upward trend in the early 2000s due to the HIV pandemic, but also because of our policy and denialism around the HIV pandemic, which resulted in a higher child mortality rates. But in South Africa right now, the child mortality, even though it's over 40,000 deaths, it has declined and more than halved compared to where we were at just 15 years ago. So yes,
that's a good example of stats. That's actually good news.
It is good news, but it also depends on how you look at it. Yes, it's progress. We have less than half the number of child deaths that we had just over 2 decades ago. But is it good enough? So in South Africa, we average just over 100 child deaths per day. But in some countries, that rate is less than 1% of the number of newborns. So yes, we've progressed, but we can still do better.
And there's a whole lot of red markings there, sadly, predominantly in Africa and also South Asia, right?
Yes. So if we compare to other more developed countries, I think there is still scope for more progress. Maybe if I look at the next indicator, and what's important is the level of freedom and democracy. So South Africans, we do complain a lot, and rightfully so in certain settings, but what does the data say? And the graph here at the bottom shows an index representing the level of democracy or freedom in the country. And what you'll see is that South Africa, according to this index, has a 70% level of democracy currently in 2021, compared to just over 20% in 1990. That's significant progress. Even more so, it's above the world average and above Africa's average. So if you look at that trend, yes, we are a relatively free country, and that's progress.
Okay. Something to take a note of, yeah, go ahead.
Quickly to maybe look at one or two more general indicators. One, the graph here shows the share of population in extreme poverty. Now, extreme poverty is quite extreme. It's measured as the people living off less than 1.9 international dollars per day. Generally, what I just wanted to highlight is that the trend is downward globally. So globally, we have made progress, and there are less people that are living in extreme poverty, and that's good. The trend for South Africa is not so clear, but it is decreasing compared to where we were at a couple of decades ago. And maybe just to end on one more indicator or example of progress, this graph here shows the level of income or income inequality. We know, and it's based on this Gini coefficient of inequality, we know South Africa is the most unequal country in the world, unfortunately, and it's clear from the trends that are shown here. But
perhaps explain that if you can. I mean, we often talk about this Gini coefficient. I mean, what does that measure?
It's just showing the discrepancy between the level of wealth. We have this very big gap between extremely wealthy people and a huge population that are living in poverty.
So you could get other countries that they are on average much poorer, but what they don't have is the division between rich and poor, and that poses its own social problems.
So it's the discrepancy between the rich and the poor, exactly. So South Africa has a very high level of inequality, but what the data is showing that this has been consistent over a very long time. So it's not that it's gotten worse or gotten better, it's just been bad for a long time. Essentially through what these different indicators are saying is that there has to be context to how you look at numbers and how you look at data, and over what time frame you picture it. So I think if you want to try and understand progress in the country, you can look at absolute numbers, as we're saying, murders and crime rates, or you can look at other indicators and what the trends and the progress has been. So the context and the timing and the time frame is important. And I hope that also ties back into investing and finance, where you make decisions and want to understand the implications and the effect of those decisions over the time frame, whether it's a short-term investment, a long-term investment, context does matter.
Because it does show once again, I mean, and we'll talk to Sabir when she just now again, that numbers is the true measurement of just about most things we do. In the absence of that, we'll just be guessing, isn't it?
Ultimately, we need numbers to quantify where we're at, to quantify decisions, but there also needs to be context and understanding of what numbers are important and when.
Okay, I'll tell you what to do. I've asked people to comment or ask questions, and they can do so. And if they are, we'll take them right away. If you don't, it'll just mean I've got 3-4 minutes more to talk to Dr. Ridhwaan Suliman about his own fascinating journey in terms of how it all started, right? So one of them, yeah, this is interesting. Are there any numbers to show how brain drain is affecting productivity and progress research in South Africa? I'm going to take you to the Minister of Stats, or from Stats SA. I'm introducing you as that anyway. Any idea you have anything?
I don't have, unfortunately, per se. It is certainly an issue. We do know there's brain drain, but I'd have to go back and do some homework.
Yeah, well, it must affect things, absolutely. Perhaps, and again, chance for you, further questions, comments, feel free to do so. Otherwise, I want to get to Ridhwaan's story. Well, perhaps talk to me about that. I mean, how did you get into this journey in the first place? Like your, not just in terms of COVID, I mean, your actual career. How did it all start for you?
So I have a background in engineering, and my career sort of moved into applied mathematics and more theoretical background. But I've just found myself during the start of the pandemic trying to understand the data and the numbers. I am quite passionate about numbers and the importance of numbers, and so in my personal capacity, decided to track the numbers and understand where we're at for COVID-19 specifically.
And what for you then is the magic around numbers? Let me explain that. You know, somebody who's a singer or is a musician or is a poet or writer, there's a certain magic they feel. I sort of describe myself as a conversation architect, and so like, what the heck is that? I know what the magic is around that. What's the magic for you even growing up and then adopting it as a career around just understanding numbers?
I think for me, just numbers make a lot more sense to observations, and numbers help us to just understand, or for me, it helps me to understand situations better. And so I just naturally lean to trying to get...
But even as a I'm gonna use the word, as a lightie, when you were growing up, you felt it already?
No, definitely. It's always been around numbers.
Okay. And perhaps last thing, because we don't have more questions, so we're going to leave it at that. Perhaps the last thing, advice to others who are watching us and now hopefully are hooked onto the need that numbers and data and then using data to make informed decisions really matters. What advice would you give them?
I think maybe just to also add to the previous point, numbers for me are non-emotional. So it takes out that factor in terms of understanding and also in decision making. Advice, I think one needs data to make decisions. Otherwise, for me, it's not fact-based. And also, once you get data and understand trends, you can make informed and non-emotional decisions.
Okay, here's one I want to leave you with before I leave you or you leave me, right? You've in fact you've tweeted about this, right? That around this very important issue called load shedding, when we had the issue around the strikes, the so-called illegal strikes, government or Eskom were very quick to say, in fact, it is the strikes that precipitated the move, this declining to stage 6. You, in fact, and you're not the only person, you've sort of argued against that to say, statistically, and that's why you're not saying it what you felt, statistically it suggested that's not the case. Tell me about that.
Yes, I think it's quite clear from the data and the trends that we were experiencing more hours of load shedding, more severe load shedding, and that trend was only moving upwards. And if we look at the trend in the data of energy availability, that trend was only moving downwards. And so it's no surprise that the situation has been getting worse, that we have experienced stage 6 now, and stage 8 is also a risk. So yes, the strikes may have exacerbated the problem, but it's not the sole reason for why we have experienced stage 6 thus far.
And therefore, when you have darkness, perhaps you need to find that moon that we spoke about. That's why the illumination from Lunar will perhaps help us in this case here. Ridhwaan, listen, great chatting to you. Very, very enlightening. I'm going to suggest that people follow you, so perhaps on Twitter. For those that don't get hooked on, what's your Twitter handle?
It's at Ridhwaan, R-I-D, the number 1 tweets.
Okay, so Ridhwaan, you notice that? Numbers once again, Ridhwaan tweets. Hopefully you've learned so much. I think it's just been absolutely fascinating. But I have a sense that certainly where Ridhwaan Suliman comes from, right, there's a whole lot more around his understanding of numbers and simplifying numbers to the broader South African public around, let's call it current affairs, issues that effectively prick your life, that will come up not just today, but I think in the months ahead. And therefore, I'd be very comfortable saying, Ridhwaan, you are a national asset, as is proved during COVID-19. Thank you for your time.
Thanks so much, Ashraf.
There we are. So a national asset, and I say that very deliberately because we are talking about assets and so much more around issues around Lunar and what they want to do is what we talk about now. For the many people I think there's about over 60, 70 people on the webinar right now. Fantastic that you're here. There's still time because I think the nuts and bolts around investments and growth starts now when we speak to Sabir Munshi and we speak to some of the panelists as well with their own stories. So looking forward to that. So if they've jumped in or they haven't yet jumped in as yet, tell them now, inform them, just share with them the link so they can jump into the space as well. Right, Sabir or Shabs, you're back again, right? Now you've got a presentation, you've got about 25, 30 minutes you want to talk about, right?
Yes, yep.
Okay, so shall I leave it to you? Go ahead.
You can leave it to me. Okay, thank you, Ashraf. That was absolutely a fascinating conversation with Ridhwaan. Ridhwaan, really incredible insights that you provided to us, in terms of how numbers matter and also which other numbers we should be looking at, so a really, really fascinating kind of discussion. So why numbers matter? Okay, I'm going to talk to you about that, and actually I'm going to start with a question. If numbers matter, then why do we get cycles in the market? Okay, so actually in some ways a little bit of a contradiction to what Ridhwaan was telling us, and let's see where we end up, in this discussion. Okay, so why do we get cycles in the market? So this picture here shows you the annual returns on the S&P 500. Now the S&P 500 is basically the index of all the top 500 stocks in the US stock market. Okay, so that is the largest stock market in the world, and on average, over a 65-year period, the average return was approximately 10% per annum. Okay, but if you look at the actual individual years, okay, only in 6 of those 65 years did the return for that particular year was it between 8 and 12%. So in other words, more or less around the 10%. In every other year, it was mostly substantially above that, and in some years, substantially below that. Okay, so it's absolutely fascinating. Why, as an investor, if you had a view that you're going to get 10% per annum, why would you not be happy just accepting 10% per year every single year and getting on with that? Okay. But you don't see that, okay? And that fascinates us, okay. And interestingly, recently, I read an article by a guy called Howard Marks. Now, Howard Marks is from a company called Oaktree Capital, and he's certainly one of the great investors, of our time, and one of the guys that I do follow, over and above a few other guys. And basically, what he says is that it's the behavior of investors that actually is a significant driver of the market itself. And what does he mean by that? He says basically, when the market is going up, investors generally conclude that it will keep on going up. Now, if they conclude that it will keep on going up, what would you do? You would keep on buying shares. And if you keep on buying shares, the stock prices will rise. But at some point, that stock price doesn't reflect the underlying earnings of that company. At the end of the day, the value of a stock is represented by its underlying earnings. That's what really drives value, okay? But not necessarily price. And that's the difference between it, right? Between price and value. So as investors think that it's going to keep on going up, the prices go up, and eventually stock prices are rising faster than earnings, and novice investors that are looking back and saying, oh, over the last 3 years, there was a 30%, 40%, 50% return on the stock market, and guess what? They start buying, okay? And eventually, you get out of kilter, and you get an overvalued market or an overpriced market, okay? And then something happens, okay? And what happens? Typically, it's some external event, like a war, okay? So we've seen it, for example, the Ukraine war, and that triggers something, or there's a corporate failure.
Gets pushed up,
yes, yeah, yes, and that pushes up petrol, and that's an event, and that particular event or a corporate failure, something happens, and then people say, geez, okay, I've been buying the stock, and I'm thinking it was going to go up, and now suddenly there's this war, and inflation's going to rise, or that company was a fraud, or whatever it is, okay, and that's when the stock market starts, coming down. And in fact, when that starts happening, initially, your average investor is looking at that and saying, no, it's going to come back. It's just down 10%. It's going to come back again from this. And actually, what happens is the stock market keeps on going down and down and down, and eventually, the pain of losing, especially when you came in very late in the market and started buying at very high values, that pain starts hurting you. And you pull out, and you pull out of that market, and eventually, the stock market reaches a bottom. Okay, and of course, more or less around that time, and nobody can actually tell where the top or the bottom is of the market. But more or less, what happens is that bargain hunters start coming in, because what has been happening is that earnings start improving relative to stock market prices, and those value investors start coming into the market. And then the cycle starts all over again, okay?
So that point, what behavior determines the market?
So behavior, at certain points in time, behavior determines the market. But eventually, it's the numbers that matter. So in other words, it's the earnings of those underlying companies that eventually matters. And that's when the market starts getting into more rational type.
And you concur with Marx, not be confused with the other Marx by the name of Karl, just sort of
yes,
that, yeah.
Yes, yeah. So I concur that you get this irrationality in the market because, firstly, because there are people, and people are more often than not driven by emotion, and sometimes there's the loss of pain. In fact, there's many studies that show that people feel much more pain when they lose $10 than the joy when they gain $10. Okay, so that's absolutely fascinating.
Right.
So,
what else do you have?
Yeah. So you can see in this market, in this picture here, which basically shows, what the prices, what prices people are willing to pay. Okay. Now, on average, right, the price-earnings ratio is basically an indicator that for every dollar of earnings, how much is somebody willing to pay at a particular point in time? Okay, so on the long-term average on the S&P 500, people were willing to pay $16.50 for every dollar of earnings. Okay, and in the recent past, we're talking about the last 20, 25 years, it's closer to 20 or 19.6%. But you can see from this particular graph that there are times when people are paying substantially more, okay? And sometimes it is because they have underestimated the potential of an earnings knock in a company due to fraud or the other events. And sometimes people are just, willing to, just get out of a market at any cost and actually give it.
They're all emotional.
It's emotional. It's emotional decisions. Willing to get out of the market, and you can see, for example, those graphs below the red lines are when people are just getting out of the market, and just because of the pain that they've experienced, and actually right at the wrong times. Okay, so that's what that graph shows. And John Maynard Keynes, who's an economist, one of the renowned economists in the world, and basically says, the markets stay irrational longer than you can stay solvent. Okay, so there is an irrationality in the markets. Okay, and basically what he's saying, he's an economist, he's a numbers person. Basically says that you can determine the value of a stock. Of course, you need to adjust it for the stuff that you don't know, what could happen in the future. And you can make some adjustments related to that, but you can come up with a reasonable valuation. But the market, not everyone does the same thing. And if a whole bunch of people act in a way that says the market's going to keep on going up, or follow somebody on Twitter, okay, that says this stock is going to go up, and everyone follows that thing, that stock could actually go up. Okay.
But that means, just to understand, are markets manipulated?
Markets can be manipulated. Markets can definitely be manipulated. I mean, we've seen that, for example, in the U.S. Recently with a certain very famous entrepreneur, very good entrepreneur. Was basically talking up a company called GameStop. Mm-hmm. Okay, and the share price of that company went up substantially. Okay. But the underlying value of that business was nowhere near what the stock prices indicated.
Okay. Right, you have more to say, right?
Yeah.
Go ahead.
So how do we at Lunar Capital, right? How do we actually start, working through this anomaly, right? We basically are numbers people. We sit there, we look at the balance sheet and the income statement of companies. We look at the macroeconomic scenario. We look at all of these numbers, and we come up with a valuation of a company. Okay, and at some point, we determine that this is the price we are willing to pay for a particular company. But we also have to take into account that the perception of what the broader market has of value. And what does that mean? Okay, so basically, if we are just pure on the numbers side, we could, in certain periods of time, substantially underperform the market, because the stock market may keep on going up quite substantially, okay, and or alternatively, we might think there's value in a market, but it keeps on going down because there's this negative perception in the market. So we have to stay in the market, okay, and we will always take a particular view. But what we're trying to do is we try and balance that with what our sense is, of what the perception of value is. And so, in other words, how are investors behaving? And if they are behaving in an optimistic way, we also have to try to be a little bit optimistic. Obviously, we can't be so optimistic that we also just buying into overvalued shares, because eventually we know that the numbers start mattering, and that's going to come down. So that's the first thing that we do. So we certainly have this kind of balance between what's the behavior and the perception of value, number one, and what is the actual value, the way that we assess it. The second thing that we do is certainly we stick to our competencies. Okay, so in other words, we have certain investment themes that are driven by our understanding of the market. Okay, so for example, we think that technology is a significant driver of growth. Okay, over the long term, it creates efficiencies in companies, it creates new products, it creates new services. It disrupts existing environments. I mean, to talk about, for example, renewable energies versus the fossil fuel type energy, type. Those things are drivers of potential growth over the long term. So we
the
like
magic number 4 IR. I mean, I think people need to
correct
get that.
4 IR, right? So we like technology as a growth sector, and particularly, for example, the semiconductor industry. There's just this demand, significant demand for more and more semiconductors, in the world. Cybersecurity, as more and more people get online. Okay, the cloud, the drive towards cloud. Even healthcare. We certainly, in the latter part of our ages, Ashraf, maybe I can talk about myself, maybe not you, but certainly, as we get older, and as population, I mean, Ridhwaan showed us some statistics there, right? And basically, people are living longer, and the longer people live, the more healthcare they need. Okay, and obviously, there's significant innovation taking place in that particular industry. Okay, 5G. The millennials, let's talk about the millennials. We talked about the silvers, we call them the silvers, people that got silver hair, if they have any hair. But the millennials, the young people, they have different way of doing things. They are digital natives, so they probably buy more things online than they actually go into physical shops for, okay? Absolutely. They look for experiences. So they are, as opposed to physical kind of goods. Even the way that they dress. We used to buy a suit that lasted us for 10 years. They buy stuff that they throw away in a few, in a few weeks. They wear it 3 or 4 times and they throw it away. So it's very different, and so we look at those particular trends and look at which companies can benefit from that. Okay, and then the third thing is that when you are in a market like we have at the moment, where it is difficult and and prices have come down, and there's this big war going on, and there's this fear of recession and all of those things, we take that opportunity to kind of just step back a little bit, not to panic in a situation like this. Step back a little bit, look at our portfolio, at that point in time, see what we see what we are invested in. Try to think about what should we be having in our portfolio that's going to be incredibly good in 2 years' time, because suddenly these opportunities are now, because we can buy those stocks at a substantially lower price than they were 6 or 10 months ago. Everyone rushes to a sale when Woolies has a sale. But when the stock market has a sale, okay, everyone runs away from it. Okay, in fact, so that's what. So when we see these things, we see opportunity, and of course, it doesn't mean that there isn't risk.
I mean, there has to be that risk.
There has to be that risk, and you have to take that, and you have to take that. You have to take that view, going forward. So the key point, really, what I'm saying is that. We've got these 3 things that we look at: value and perception of value, stick to our knitting, and think, 2 years ahead, about where we could see great returns on our portfolio.
Just on that part, when you say don't panic, and I think it's an important one. You've been using the word we often enough.
Yeah.
Now you head up Lunar Capital, but who's we in the brain's trust that makes decisions? Because I would just think that, goodness, for you to make all those decisions on behalf of investors on a day-to-day basis, like, wow, what a responsibility.
So we is, it's my board of directors. They definitely are a key part of our investment strategy. So every 6 months, we present an investment strategy to the board. They give us their ideas. We work through that, and then we work through that, and basically that's what we generally stick with, right? Then what we've got is we've got a smaller group of 4 of us. I mentioned Vijay, boss. He's part of that. Carl, is part of that, and Danielle, is also part of that. So basically, we meet twice a week, on a Monday and on a Friday, where we have a specific investment committee. So if there's an idea that we've got, we present it, we do the analysis, we present the analysis, and we take those decisions. So that's basically it. And ultimately, the decisions do lie with me, but I have to listen to everyone's views, and sometimes I disagree with them, and live the consequences. and that's the way that it is, you know. So
But
that's
the track record, and I know you have more to say, but the track record would suggest that you, as a company, you're winning for your investors more than you're losing.
absolutely, right? Yeah, absolutely. So what we do is we've got an allocation model. Now this is the allocation model that I show you for the Lunar, the Lunar Fund, the Lunar Capital, the Lunar BCI Worldwide Flexible Fund. But it's a similar strategy for the for the offshore portfolio, except that there we don't have any local investments. It's only foreign investments. But basically, what we do is we group it into 4 buckets. Okay. And what are the 4 buckets? Okay. Basically, we talk about large cap. So large cap is these large companies, high quality companies that have significant value. So about between 50 to 60% of our portfolio is in that camp. So, for example, Berkshire Hathaway, Amazon, Microsoft, a company called ASML, who are manufacturers of the equipment to make semiconductors. It's a Dutch-based company. Sanlam, Shoprite. I'm not going to run through all of that, but just to give you a sense of what sits in that portfolio. For that large high quality. Then we also have about 20 to 30% of our portfolio in what we call mid-cap shares. And mid-cap is like your middle cap companies that potentially have a growth. They've got good revenues, they're still growing, they've got good margins, and potentially could become large cap companies. Okay. And then we look for those disruptor type companies, okay? So, small companies that are, we look at that and we see that technology is quite interesting.
The potential for massive growth.
Massive growth, or it's driving a particular industry. So, for example, there's a company there called CrowdStrike, and that basically, is a cybersecurity company. Lululemon, which is a company that's in this luxury athletics wear kind of business. So we think that those kinds of companies, could potentially become, significant, over time. Obviously, they're a little bit more riskier, but that's why we don't take big positions in that. And then lastly, we always sit with a number of cash and bonds. So I mean, what's important there is that we try not to have, less than, about 70 to 75%. In the stock market at any point in time. So when we see the risk is high, we are around 70%. When we see the opportunities are there, we're closer to 95%. Okay, and then off that, offshore in the Lunar Fund, between 55 to 70% is offshore, mainly in the US, and then local, obviously 30 to 45%, depending on where we see the opportunities. And as I said, in the Lunar offshore portfolio, it's basically 100% offshore, and there. We are more broadly spread, so it's not only US, it's in some of the other jurisdictions.
Those that form part of the large cap, the cost per investment is far bigger, right? Cost per share.
Yes.
But the risk is lower.
The risk generally is lower. Generally is lower. Obviously, those companies, they could be overpriced, but generally the risk is lower.
Okay. That's not all. You have more to say. Go ahead.
Yeah. So this just gives you a sense of, some of our top 10 holdings. It's a split. You can see, the gold is basically the offshore investments. The blue is the local investments. So Berkshire we've talked about, FirstRand, Vodacom, Shoprite. The themes. Think about the themes that I've talked about. The iShares Biotech ETF. Okay, ASML, Amazon, Alphabet, Walmart. One of the largest retailers in the world. Doing some interesting stuff from a technology point of view. So there you go. That just gives you a sense of where our thinking is. In the Lunar Fund. Okay. This gives you a sense of our return over the 5-year period. Okay, so we've been in existence for 6 years. So over the 5-year, we like to look at long-term investments, and in the long term, basically we've given an average of 7.43% per annum, and a total return of about 43% over that period. And that is despite, you can see that in the graph, despite the knock that we've took, since the beginning of this year. And really, again, we see this as
the year precipitated by
overvaluation, number one, and then obviously triggered by Ukraine and the oil prices, and now in fact the central banks raising interest rates, which makes the potential for a recession higher.
And
Okay.
here's a quick one. Ukraine versus COVID-19 in terms of impact?
So
investments
interestingly, COVID-19 in March 2019, when March 2020, when COVID was starting to rapidly increase, there was a significant drop in the market, but the market rose from there onwards incredibly over that period. So if you were smart enough to have invested at that part of the bottom of the market, you're probably up over 100% in less than 2 years.
Wow. Okay.
Incredible run in the market. I don't think I've got the graph for that, but that's given you a sense of it. So that's where. Whereas Ukraine, the impact is still there. So for example, the US market is down about 20%. The NASDAQ market, which is where we focus on more technology, down about 30%. Even the JSE is down about 14-15% over that period. Okay. Yeah. So we talk in numbers, right? And we talked about performance. So let's talk. Let's give you the full view, right? Over a 6-year period, 41% return. 5 years we've talked about, and in the last year. So in other words, from the 1st of July 2021 to today, we are down about 8%. And I looked at, for example, what is the difference, say, for example, in the NASDAQ and the JSE. And in those two markets, the JSE was flat over that period, and the NASDAQ is down, over 16% over that period. In fact, I think it's closer to 18 or 19% over that period.
I'm thinking about people in the audience, investors or new investors, wanting to know what do they do next, and hopefully you can share that with us in the 8 minutes or so we have remaining. Right?
I'll give you some sense on it. So that gives you the sense of performance. But our measures, so these are, the reason I put numbers is why numbers matter. So for us, what matters, which numbers matter for us? Of course, performance is the core, okay, of what matters for us, okay? But we also like to measure other things, okay? For example, AUM means assets under management. So how much assets do we have under management? So we've got about 118 million of assets under management, of which 113 is in the Lunar BCI Worldwide Flexible Fund. That's a unit trust. Of which, and that unit trust is available to all investors. The minimum lump sum investment is 5,000 Rand, and you can go, as low as you want to. Maybe 100 Rand's too little, so I would recommend something around 500 Rands per month on a debit order. So that's available to almost anyone. That can afford 500 Rands a month, for themselves, for their kids, for their long-term investments. Okay. Then the second product that we've got is our Lunar Offshore Portfolio Management product. We've got about 6 clients in that, with $330,000. In fact, we've got a little bit more because we've got a few new clients that came through this this month. But that's basically what we've got at that point in time. There, the minimum investment is really is for high net worth individuals. So you're really looking at a minimum of about 500,000 Rand per client, and all of it is offshore. You need to use your forex allowance to be able to do that. Okay, so that's our our core measure is assets under management, because assets under management comes from performance. If the fund performs well, the assets under management go. We get more clients. That also drives it, and then of course it's about clients. How many clients do we have? So at this point in time we have 158 active clients. And Ashraf, last year when we spoke, okay, we were on 100 clients. So we've grown our clients 58% growth, yeah,
almost 60%.
Yeah. So 58% growth in our clients over the last year. Okay,
well,
so
that's fantastic.
Yeah, so that's and the split between men and women, or males and females, 51-49%. We've got 10 companies in there, and I try to kind of we're very much a family oriented wealth kind of business, and the impact that we have there is on about 105 families, and I think it's larger than that, because in some of those companies, there are groups of families that that have basically come together in a Stockfell type situation and invested in it.
And I get it now. You're getting generational investors.
That's what we are trying to get to. Yes, and in fact, in some of our clients, we've got grandfather, grandmother, their children and their grandchildren. So that's just like, I mean, that's just fantastic for us. So, and we've got a few of those, and that. And they know they can phone us anytime. They know,
how
we
are you
know
measuring yourself? Obviously, the skeptic would say, okay, great that you're doing that. Now, how do you measure yourself? Are we talking numbers against others who do similar things to you?
Yeah. So we find ourselves as being a very personalized business. Okay. So people can phone us at any point in time. They give us, I mean, kids will phone us. They want advice on their investments. We help them through that. Okay. I mean, I'll talk a little bit about that just now. In fact, let me maybe take you.
All right, you've probably got about 4 minutes.
I've got 4 minutes. So,
it, yeah?
so you asked the question. Okay, so what do investors do now?
Yeah.
Okay, and what I want to show you in this graph. Okay, sorry, I don't have a pointer, but basically, look at the periods of growth after a big drop in the market. So, if you look at, for example, 1975, so between 74 and 75, you see that big drop. Okay. There you see a 37%, 23, 24% growth. Okay, another small negative year, but you see a period of significant growth. Okay, look at the period during the global financial crisis, 2008. Okay, that minus 36.5. Look at the growth during that particular period. Okay, so what we can't tell you is that there isn't going to be another negative year, but what we can tell you is that if you are not invested, when that turn comes, okay, you are not going to be part of it. Okay, that's the message.
So you're not shopping during the sales; you'll miss out on the big deals.
Absolutely, yeah. That's really the key point here. Okay, and it's, of course, we're not trying to predict that there's going to be, super growth here, etc. But you have to give yourself the opportunity, to try and participate. Where the growth is going to, when the growth is going to be there. Okay? It's not to say that there isn't risk, and of course, we need to understand that as well. But at the end of the day, that's part of our job is to try and assess at which point do we go more aggressive into the market versus less aggressive into the market.
Is there anything more you have to tell us? Yeah, you do, of course.
Yeah. So just maybe 1 or 2 slides that I want to get through. Okay, this really just shows, for example, 10 years, 10 year stints, of what you see, okay? And in almost every period, you can see, every 10-year period, you can see significant growth in the market, okay? And in fact, in the last 10 years, so for example, from 2011 to 2021, there's a 368% growth in the S&P 500. Now, of course, that growth, I'm showing up until 2021, and of course, it's come down somewhat from that, okay? And the point is that, yes, it might come down a little bit more, okay? But you can see over a 10-year period, there is a potential to grow, okay? Lastly, I just, you say, why with us and why not with? So we have 3 parts of our strategy. Learn, we are evangelists for investing. We will, you phone us, you want to talk about shares or investing, we'll talk to you forever, okay? We share our insights, we write blogs. We've recently launched a weekly roundup, that we put up, and we give you a view, of.
And people must be informed. I mean, therefore,
absolutely, yeah. So if they follow us, for example, on our mailing list, okay, and if they want to, they can just go into our website, follow us on our mailing list. They'll get all of that. We've had family wealth building workshops, the family balance sheet. I mean, people will talk about that. The other thing that we did was that. Last year, we launched the Youth Academy, right, that we run for free. We guinea pigged, 3 individuals. One of them now, is working for Lunar Capital, and the other 2 are absolute, in fact, all 3 of them are absolute ambassadors, for Lunar Capital. And we had, our first batch of formal intakes this year. We've completed that first 10-course session over the next 6 months, and in fact, we've just agreed the next batch that will start on the 23rd of July, for the next batch. And actually, some of the youth in that academy were about 61 years old, or 62 years old. Okay, so we call it youth. It's all about that.
They've been around, yeah.
Okay. Invest. I mean, our core philosophy is growth at a reasonable price. Okay. What I want to say is that every single director and shareholder is invested in the fund. in the Lunar Fund. Obviously, we can't do the offshore because those are for individual portfolios of the individual people. But we put our own money. We believe we must have skin in the game. And I can tell you that when the markets come down, we feel the pain. And when the growth comes, we feel the benefit.
As shareholders.
Absolutely. Well, as investors in the fund itself. As investors in the fund itself. Okay. So, you know, we see that. Okay. And as I said, you know, we've got the two products, and really what we want is, you know, get other investors to co-invest with us. And about enjoyment, we love what we do. You know, we're passionate about it. We want to make an impact in people's lives. We want them to learn about investing, to build wealth for themselves. And at the end of the day, our greatest joy will be, you know, if our clients make money and they can use that for the stuff that they enjoy, that will be our joy.
And I mean, that's the point. The money or the wealth opens up avenues to other aspects of a lifestyle that you wouldn't ordinarily have. Right?
Absolutely. Yeah.
Maybe that's where the enjoyment comes in.
Yeah.
Just if we're going to wrap up now, just the last thing, unless you have more to say, and maybe this is a pitch to your own base, but also to potentially new investors, right? What's the magic for you around Lunar Capital? Why does it work?
Why does it work for us? Okay, so firstly, you know, as I said, we have skin in the game. Okay, so we are, you know, we have our own money in the fund. We have been investing, as I said, right up in the beginning. You know, from, I mean, in my case, certainly for over 30 years. Okay, I've been investing in the markets. You know, all of our directors bring specific experience. You know, whether it's telecoms, technology, healthcare, you know, investments, quantitative kind of skills. All of that, you know, we bring that to the party. We are available on a personalized basis, you know, for an investor that is willing to invest 1,000 Rand with us or 5 million Rand with us. Okay, so, you know, we make ourselves available, you know, for that. And the other thing is we want to make an impact on not only that person's investments, but, you know, in their families.
Well, I think you certainly have done that, and hopefully a lot more will be done. It's been great chatting to you for now. I'm saying for now because I think there'll be more coming up, right?
Yeah.
There we are. Really, I think fascinating. Hopefully you've enjoyed all of that. And when I say great chatting, what I mean is there's a couple of things. There are some panelists who are investors, and we're going to talk to them in a moment, right? So it's not goodbye to Sabir, not yet, right? But also a chance for you to, again, post comments or ask questions, which you can do right now in the chat line. Do that right away. Otherwise, you're going to miss the opportunity. It's really important. And I think certainly understanding what the team does here at the management level, they want questions really that will, I think in many ways it's going to get them to think beyond what they're doing right now. So we welcome the questions. But listen, it is time for praise, and there should be, and you've had great experiences with Lunar Capital. Well, why don't you just drop that in the chat line as well? Looking forward to that. Now, I did mention that we're going to have 3 panelists to talk to us, right? So while Shabs is still with us, the panelists we're going to have is Dr. Meenakshi Jeevan, Hanif Randera, as well as Bhavani Gulab. I'm going to bring all 3 up now, and we're going to have a fascinating chat about how they've seen their relationship with Lunar Capital. It's a unique win-win, learn, invest, enjoy relationship. So let me bring them up right away. Okay, there we are. Let's get it in order of how I mentioned you guys. Good to meet up with you. Hanif, as always, thank you for your time. You can just grab a seat there. And of course, Bhavani is online, right? So I tell you what I thought we should do is before we even get into some of the experiences, perhaps with you, Dr. Meenakshi Jeevan, just a quick one about what is it you do, and then how did you land up getting involved with Lunar Capital?
Well, I'm a specialist family physician, and I've been in practice for the last 29 years. So I think I started investing in Lunar Capital in 2016, shortly after their launch. But before I give you reasons for why I joined them, I think I need to perhaps give you some insight into how I viewed money and view it now. So savings has always been a big thing in my family. Mm-hmm. My husband, my son, even my parents recommended that we save more than we actually spend. So for me, money was putting it into a safe place, like the bank, a money market, a unit trust. But I was often disappointed by the returns. And while I was building a career, growing my practice, I didn't have the time to really concentrate on my earnings, and it didn't really matter to me. But over time, I realized that it's not about saving, it's about investing. And so I actively decided...
Because it's the safe place that you talk about.
Yes.
I mean, in terms of asset depreciation, you think you're earning, but you're earning less than what you can replace with, right?
Yeah, definitely. And especially if you, I think if you don't really actively think about what you're doing, and you just leave it up to someone else, you can get quite frustrated. And I think that's where I am now. I'm so much more satisfied that I have some control in how I invest and what I choose.
And that's why you chose Lunar Capital?
Yes, because I think that with Lunar Capital, they're extremely transparent. I align myself with their ethos. I look up and I'm inspired by the leadership. And I'm especially impressed and that was one of the main reasons why I actually joined Lunar Capital, was because they had a lot of their own money invested in the company.
Yeah.
So that was very important to me. And I have yet to have come across a company where I could, just pick up the phone or at any point have a discussion with the director.
You don't have a call center agent coming back to you in a week's time.
And I've really been fortunate to have, been part of their conversations, that are, being part of a group of dynamic individuals. And for me also, investing, and I say me, I mean my family, is that we also wanted a greater offshore exposure. And Lunar Capital definitely delivers in that way.
Okay, now I'm going to ask you about your family just now, but I want to bring in Hanif Randera as well, right? Hanif, so yeah, give me your story firstly.
So Ashraf, thank you for the question. I was very fortunate. I came back to South Africa in '91, and my first job here was with Dimension Data. So there's two parts.
That's when I met you, by the way.
Exactly. So there's two parts to this question. I mean, we were very lucky in those days. They gave us share options, and as you know, Dimension Data was very, very successful, and the share prices just rose.
Yeah.
But at the same time, it made you complacent. Because you had share options, you didn't look at the bigger picture.
Yeah.
You didn't look at the investment marketplace. And there was almost a situation where you had investment amnesia almost. Okay. So as I got to my retirement stage, I started thinking about how am I going to increase my portfolio.
And you read the book Who Moved My Cheese or something along that line. Yeah.
Okay. So and then I got to know Sabir as a friend, and also some of the other investment partners that he started with, High Gain. And the story resonated with me. When you trying to invest in a company like the big banks, you got a salesman coming to you and giving you the spiel, and all you're thinking about is they want your money. You don't have any relationship. There's no trust. You don't have integrity about the company. And as Meenakshi said, I was putting my money in the bank and I was getting some interest, and I thought that'd be fine. But as things happen, interests drop and your money just dwindles. Inflation goes up, and often what happens is you don't have much. So I had to look at some other option as I got to my retirement age. I then got involved with Lunar, and I was very lucky. I got invited at a very early stage.
Okay.
Aside of being an investor and putting my own skin in the game, I'm also a director of Lunar Capital. And the story goes on from there.
Well, we can talk about you being the director and what that really means, but also about just how it impacts on family as well. I want to bring in Bhavani Gulab, right, who, you're sort of been pitching specifically to talk to you because you come with a younger perspective, and I said it in a very, very complimentary way. But first up, maybe tell us what you do.
Okay, thanks, Ashraf. So what I do is I work in the investment space. I've been in financial services for a couple of years. I studied finance, and I've been investing. I picked my first stock when I was 13, so a young investor. So a little bit different to Meenakshi and Hanif's stories. I started quite early, and I started with investing instead of saving, and that's really because I had the education on it. So my dad's a member of High Gain and Lunar, and I was exposed to investing from that early age. So that's really how I started my investing journey. But then joining Lunar, even though I feel like I have some knowledge on investments, I still felt there was a gap, and Lunar could give me that, Lunar Capital could give me that knowledge, because I'm part of the Lunar Youth League, as well as the investments that Shabir went through. So the Lunar Capital Fund, I'm invested in that as well. So there's, it doesn't matter what level of investor you see yourself as, a novice or an expert, there's still opportunity to grow your knowledge. And that's, why I chose to invest with Lunar.
And I take it that although, because you yourself are in the investment space, and notwithstanding that your dad is a director, it actually makes you even more critical, isn't it? You're not going to just willy-nilly, like, I'll do whatever you say.
Yes, exactly. It gives me the expertise to interrogate the investment decision, and not just take it, at face value. And I think that ties into the point Meenakshi made, where she said you get direct access to the portfolio manager, right? You can phone up Shabir anytime and ask him any questions about your fund. And in the Lunar Youth League, we get that exposure, that access every 2 weeks. So it's exactly what you're saying. You have the opportunity to answer questions.
Shabir gives you like stocks or shareholder tips, and so does your dad, and you bounce off each other, and you get your own as well? Or you pass it on to them too?
The answer is no tips, but he gives us the tips on how to find our own stock. So how to analyze one, how to evaluate one. So the tips are improving our investment knowledge and making our own decisions, but no stock tips, unfortunately.
Well, maybe that'll change. You never know. Shabir made the point about the Lunar Capital Youth League. He was talking about that earlier on. And I understand you've been a part of that. Share that experience with me.
Yes. So I was part of the original 3 that Shabir mentioned, and then I also was part of the kind of pilot program that ran this year, the first part of the year. My experience has been really good. Like I said, I was investing beforehand, but I had a lot to learn, and that's what I did in the Lunar Youth League program. And I'd say the key concept I learned, or that kind of got reinforced for me, was the concept of time. So I want to, kind of explain that a little bit more. So time, I see it as like 3 aspects. So the first part that I learned from Lunar Capital is investing your time in learning how to invest, right? So saying, I want to actively improve my investment knowledge by joining Lunar Youth League or asking questions, growing my knowledge. Then the second aspect of time is staying invested, right? Starting early, like I've done, choosing to stay invested. There's lots of uncertainty, like Shabir talked about, and Ridhwaan talked about, from March 2020, markets have been up and down, and it's been really uncertain, really volatile. But Lunar Youth League has reinforced the idea that if you stay the course, and even Shabir mentioned earlier, if you stay the game, you're more likely to reap the rewards. So that's another aspect of time I've learned. And then the final aspect of time is really timing. And it's quite funny because Shabir gave the example of Woolworths being on sale. I would say Zara being on sale, because I'm a millennial and I don't shop at Woolworths, but that, the market being down, deciding to buy at that sale price. I mean, we do that every day, right? You'd rather buy some Apple AirPods at a low price than a high price. So why not buy some Apple stock at a low price rather than a high price? So it's really, changing that feeling that it's almost counterintuitive. You're saying, this is cheap, I want to buy it if it's a good, but if it's a stock, you say, my money's going down, I'm worried. But it's, changing reframing your thinking process. And that's what the Lunar Youth League has done, or enabled me to do better.
And I take it that, it happens to many older South Africans, but also many younger South Africans, where many of them are unemployed, not earning salaries, not getting any jobs. But there are many others who are employed, and they haven't made the type of wise learning decisions that people in this webinar have made, including yourself, right? And I would like to think that you're exposed to those people. What sort of conversations are you having with them? What are they asking you? What are you telling them?
Yes, I think it's a really good question, because it's true. I studied finance, like I said. Most of my classmates would have the same knowledge as each other, but are still scared or reluctant to invest, right? A lot of people save, which is good because you come from this background that teaches you to save your money, but not how to invest your money. So there's no practical application. And I think the reason is there's so much information and it's so overwhelming. But when you have this access to Shabir, you have the access to the Lunar Youth League, it distills the information for you and you can trust it. And I think that's important with investing, right? You don't want to just put your money somewhere you're worried about it. It's your life savings. And when you're young, every rand matters because you don't have enough disposable income. So you need to be able to trust the person you put your money down with and understand. So that comes back to investing time to understand where you're putting your money. So it's about taking all that information. We have more information, now than ever before. It's at our fingertips. It's on, you've got finfluences and all those things. You've got GameStop and all of that, meme investing. But it's about saying, do I want to invest in hype? Do I understand it? Or do I want to trust someone who understands how to invest and get the knowledge from them, or the fund from them? Either way.
Okay, I was going to ask you how rich have you become because of Lunar, but don't answer that question. Maybe when we have the coffee with the family, we'll get that question in a moment. Just let me remind you as an audience, comments, complimentary comments, general comments, most welcome. Specific questions to Sabir in particular as the CEO of Lunar Capital are welcome, but also just in terms of questions to the panel, because you've learned, I think the panel has presented for you a human face, not just in terms of the people running the organization, but the people who have invested and therefore have derived maximum benefit. So if you wish to ask them questions, well, you're going to get a chance to do so. I suggest you just post that in the chat line right away. Moving on to back to you, Meenakshi. You spoke about your family, so I wanted to touch on that. So in your family, were you the first investor with Lunar and they followed you, or you followed somebody else?
Yes, no, in my family, I was. Well, maybe I followed my husband, but yeah, I have 3 other sisters. And I have nieces and nephews and colleagues and friends and everyone that I have,
Elevator,
I have encouraged to consider Lunar. Okay. I also feel quite strong about women being investors. I think that, and it's not meant to stereotype, but I think that women haven't always been considered as investors or good investors. And, there's always been the shift that men would earn and invest even in a household.
And make the decisions.
And make the decisions.
I mean, do you think that should change in terms of now we won't even get into the issue of whether women should be empowered. I think that's a given. Yeah. But the more important one is that still far too many women, besides those who are employed in the financial services sector, for whatever reason, that the jargon that is being spoken about there just doesn't suit them, and there's a mental switch up to say, you know what, this is not for me. Yeah. How do we change that?
So I think it's not really that complicated. I think it has gotten better than maybe when I started working 30 years ago. I think women are in a better space now, like Bhavini and like so many other young women that I know. But I think that you just need to start early. You need to trust, and I think women are intuitive. We do our homework. We research things, and when we get into it, we tend to stay in it longer than men would. I think men are more impulsive. And I'd like not to think it's tongue-in-cheek, but that's just been my experience.
Well, there you are. And therefore, I mean, maybe it's almost a repeat question, but it's not intended that way. Yeah. Advice then to other women in this space now, as for the webinar, but also males who are in this webinar, and their family members, whether it's wives or daughters or whatever, who are not in the space now. What advice would you give to them now? Because we all understand that there's a massive need to change the paradigm, isn't it?
I think everyone should think as a breadwinner. So I read a book once, Think Like a Breadwinner by Jennifer Barrett, I think. I think roles shouldn't just be stereotyped, and I think everyone has a place to contribute, men and women equally. And so I would encourage anyone to encourage their kids, both boys and girls, to know that they can invest, they can earn, they should earn, and they should invest wisely.
And perhaps have that conversation over supper, as opposed to many other things that we tend to have instead of this, right? Which brings you to you, Hanif, as we're going to wrap up pretty shortly now. For all intents and purposes, you've had a successful career, yet you've also made the point that you've slipped up in terms of understanding the value of investing until a much later stage. So on reflection, if you spoke to Hanif the Lighty, what would you tell him?
I certainly would learn a bit more, and understand the landscape. But aside from that, I think I would take more risk, which I didn't, because I think I was in a comfort zone at the time. As I said to you earlier, in my retirement, I'm now taking a risk.
Okay.
But it's a qualified risk. Yeah. I know the people I'm dealing with. I think the people I'm dealing with got lots of integrity. There's immense knowledge in the people that are involved in Lunar Capital. I mean, there's like 50-year knowledge base. And as everybody has said, you've got access to all of them whenever you want to. Okay, so you can ask any question. As part of the Lunar Youth League, I was also involved. I was the grey-haired man. And again, you never stop learning. And if you keep learning, you got a better opportunity to invest or even, think about things in a better way. So for me, Lunar has been an eye-opener. The simple thing like a balance sheet, we talk about numbers matter. Every one of us basically have a balance sheet. We look at how much we got, how much we earn, what do we spend, is there any ready cash?
Even if you don't have a balance sheet,
exactly,
you still have a balance sheet.
Yeah. So even up there, you got it. Yeah? So numbers do matter in that case. So for me, it's been a huge learning curve, and it still is a learning curve. And I think we're a 6-year company. We're still quite a young company. And if you look at the growth in the last year, that says something. For me, that's a success story.
Well, hopefully even more will come. Which gets me, as we wrap up, then I'm going to ask you, in fact, I'm going to ask all three of the same thing. Bhavani, starting with you, perhaps just one line, right? And I'm going to get Sabir to make some notes here, right? What's the one piece of advice, as the company's 6 years, moving on to 7 and 10 and longer, what's the one piece of advice you'll give the company?
Up your social media presence so that young investors can engage more.
In fact, I'll give the same advice as well, and I probably told them that last year too. So that's one. What about yourself?
I've also had exposure to the balance sheet, but what I also did get from Sabir was to consider looking at other financial aspects that impact my family. For example, estate planning, wills, our trust. I would think that if it could be a one-stop shop. Up to now, it's been an informal advisory service. But yeah, that
even
would
if there
also
will be other consultants,
yes,
because you're right.
definitely.
Once you created the wealth,
Yeah.
then what happens to the wealth? Even if, let's say, you pass on one day, then
Yeah.
something needs to happen. So you
Yes.
need those decisions to be made.
Yeah.
Okay, good advice. Hanif, yourself?
I think it's a numbers game at the end of the day. I mean, as the portfolio increases, we can obviously invest in other opportunities. And I think, as Bhavini said, social media is very important for the young generation. But I think just generally the marketing side of Lunar needs to be upped. But again, that's about how much money you got and how much you can spend. So as we can grow the assets under management, things can happen. We can introduce other things as that happens. Also create an office and, employ people to do these things. You can employ people that have these expertise and manage it.
And it comes at a cost, so you need to
Absolutely.
Okay.
Yeah.
Well, I'll tell you what, let's wrap up then, because there's a lack of questions, which means perhaps people are all just very, very satisfied with all those things, and that's all fine, right? Maybe the point that was made earlier on, the biggest risk is not to take any risk at all. I mean, that's a risk in its own right? Chefs, we're gonna wrap up. So perhaps, a final comment from your side, not just to all of us, because this is a webinar. People can watch it, they can share it even later. This entire webinar will be put onto your Lunar Capital website, so they can share it at a later stage. What's your advice to people watching it?
So my advice is very simple. Investing is a long-term game. It has its cycle, as I've shown, but over the long term, it is probably one of the best ways to build wealth for you and to create generational wealth. So my view is take a long-term view. I'm passionate about learning. I think what I would like to say is, firstly, thanks to Bhavini, Meenakshi, and Hanif, for firstly, for sharing their stories, but also pointing me in a direction that where we can take things. What I can also say is that you know, my engagement, for example, with the Youth League, and certainly, you know, with our clients and my fellow directors as well, I learn from them too, okay? And I can tell you that Youth League, you know, is a vibrant place. You know, some really bright minds that give some wonderful kind of insights. So, you know, I'm on that learning journey as well, and I, you know, and I hope and I know I will never stop learning. So, you know, so that's my journey, and so sharing that, just saying to everyone else, you know, you have to learn about investing, and you know, you have to take that step, you know, to invest, but you have to take the step to learn about investing as well.
Well, I think it's an important point that you have to learn about investing, because you spend so much time working to create the wealth, and then somehow by chance the rest will just happen by luck. I mean, it's something that doesn't make sense there, and perhaps something that's part of a broader national education scheme around finance and investing. Okay, a couple of things then before we wrap up. One is, I made the point already, this webinar is recorded, so share that with everybody else. You'll find it on the Lunar Capital website. There's also going to be shorter sound bites of like really punchy lines that you can share, and please do that. Then the point made about social media. So here's a challenge to you. I think the point is well made, that more younger people need to be drawn into the space. So what about you? And I think even the older people, in fact, have some sort of a social media presence, right? So whatever presence you have, be it LinkedIn, be it Instagram, be it Facebook, be it Twitter, but also be it TikTok as well. One of the fastest growing channels in the world, by the way. Use that hashtag Lunar Capital and just say something like, I was here. Can you do that? I promise you, if you do that, I'm going to look for that hashtag, okay? Just Lunar Capital and something like, I was here. And then perhaps feel free to add further comments on any of those spaces that you have. Before we wrap up, just one thing that I want to just add in terms of where I sit in, right? So Champion South Africa project that I drive, a movement with just one goal, to build South Africa into a champion nation. I'm not going to talk about that, but I'll leave you with this, because this is a growth, but a challenge to all of you, okay? And it's not just about money, right? Many people watching us are super talented, great skills, great drive. The biggest problem we have in our country, right? And I certainly want South Africa to become a champion nation. I hope you want to do the same thing. The greatest challenge for us in the country is we somehow don't link our personal skills to national skills. So what am I saying? I'm saying to you that you have purpose, you have personal purpose, whatever that personal purpose is. Now, what is our national purpose? I promise you, if you put out a poll on all social media platforms, what is South Africa's national purpose today? I think you're going to battle to get an answer. You will battle. But think about it as a starting point. What is your purpose? And then try and ensure that your personal purpose can be linked to the national purpose. Even if we don't have it now, at some stage, it will evolve into a national purpose. When you make that link between your personal purpose to national purpose, you're basically saying, in simple terms, my success is South Africa's success, and South Africa's success is my success. And it's that link that will ensure growth for you as an individual and growth for you as a country. And a good example of that really is what Lunar Capital is all about. So as we wrap up, and you hopefully pick up all these rich nuggets from I think a wonderful session that we've just had. We've all been speaking from the very beginning about numbers, why numbers matter. So here's probably the most important one of the whole lot, okay? Lunar Capital. Do they have your number? You think about it. Good night.